Ghana's economic story has taken an impressive turn in 2025, with one of the most significant developments being the rapid and sustained growth of its gold reserves. In July 2025, official figures revealed that the Bank of Ghana's gold holdings had reached a historic 34.40 tons, representing a steady climb month after month and a clear signal that the country's gold accumulation program is not just a policy experiment, but a well executed national strategy. Before we dive deeper into today's update, take a moment to like, share, and subscribe to the channel. Your support is key to helping us grow and reach more viewers like you. Don't forget to hit the notification bell so you never miss out on exciting updates. This achievement marks a 4.09% increase from the previous month and an 8.05% rise since the beginning of the year, when reserves stood at 32.99 tons. More importantly, it signals Ghana's deliberate effort to build a stronger and more diversified financial safety net in the face of unpredictable global economic conditions. The journey to this point has been nothing short of remarkable. Just 2 years ago, in May 2023, Ghana's gold reserves were at a modest 8.78 tons. From that position, the Bank of Ghana has managed to more than quadruple its holdings in a little over 2 years, a feat that underscores the aggressive pace of the country's gold acquisition strategy. This expansion is not accidental. It is the outcome of deliberate policy choices rooted in the recognition that gold remains one of the most reliable assets in times of global financial instability. The Domestic Gold Purchase Program, which allows the Bank of Ghana to buy gold directly from local producers, has become the cornerstone of this accumulation drive. By relying less on volatile external debt markets and focusing instead on its own natural resources, Ghana has taken a bold step toward reducing vulnerability to foreign shocks while supporting its domestic mining sector. What makes this strategy particularly significant is its timing. The global economy in recent years has been rocked by rising interest rates, volatile commodity prices, shifting investor sentiments, and geopolitical uncertainties that continue to reshape international trade. Many emerging market economies have struggled under the pressure of these forces, with currencies depreciating sharply and foreign reserves dwindling. Ghana, however, has found a way to build resilience by turning to the very resource that has long been its pride: gold. This accumulation of reserves has become a powerful stabilizing force for the cedi, which has shown relative steadiness in 2025 despite global headwinds. The importance of gold in Ghana's reserve strategy goes beyond currency stabilization. Gold is increasingly being used as leverage in global finance, offering countries like Ghana a more stable asset compared to foreign currencies that may fluctuate with market dynamics. By holding gold, Ghana can secure affordable financing for urgent foreign exchange needs without piling on unsustainable debt. This is in line with the government's broader economic goal of reducing debt vulnerability while maintaining steady growth and industrial progress. By anchoring its reserves in gold, Ghana is not only protecting itself in the present, but also laying the groundwork for a more sustainable financial future. Observers note that the gold accumulation program is tightly linked to other innovative policies introduced in recent years, such as the Gold for Reserves and Gold for Oil initiatives. These programs have enabled Ghana to exchange gold directly for essential imports, particularly petroleum products, thereby reducing the demand for scarce foreign currency reserves. This approach has been hailed as a clever solution in a global economy where access to foreign exchange has become increasingly challenging for many developing nations. By using its gold output as a direct bargaining chip, Ghana is effectively bypassing some of the vulnerabilities that come with heavy reliance on external debt and foreign aid. The results of these policies are already evident. The steady increase in gold reserves has boosted confidence in Ghana's economy, not only among citizens, but also in the eyes of international investors. By July 2025, Ghana's reserves had climbed from 30.53 tons at the beginning of the year to 34.40 tons, with consistent monthly gains. This pace of growth has been described as the fastest in over a decade, and it demonstrates how quickly the Bank of Ghana's policy framework has taken root. Economists argue that this approach is not just about stockpiling gold, but also about reshaping Ghana's entire economic outlook, giving the country stronger negotiating power in global commodity markets and multilateral financial engagements. Central to this success story has been the establishment of the Ghana Gold Board, also known as Goldbod, which was launched earlier this year to regulate and centralize the purchase of gold from both large scale and small scale miners. One of the persistent challenges in Ghana's mining sector has been the smuggling of gold, which drains the country of valuable revenue and reserves. By introducing a centralized and transparent system for gold purchases, the Gold Board has been able to curb smuggling and ensure that more of Ghana's gold output is retained domestically. This not only strengthens the country's reserve position, but also ensures that the benefits of gold production are more directly felt in the national economy. Industry watchers say this policy shift has also boosted investor confidence. A country with strong gold reserves and reduced dependence on external borrowing is naturally more attractive to investors, who see it as a sign of economic discipline and long-term planning. Ghana's gold-backed stability provides reassurance that the country is capable of meeting its obligations even in times of global financial turbulence. This in turn opens the door to better financing terms and partnerships that can drive infrastructure projects, industrial growth, and social programs. The broader significance of Ghana's gold accumulation drive can also be seen in its impact on the mining sector. By buying directly from domestic producers, the Bank of Ghana has created a reliable market for local miners, both large and small. This not only supports job creation and local industry, but also reinforces Ghana's position as Africa's leading gold producer. It ensures that a greater portion of the value from Ghana's mineral wealth remains within the economy rather than leaking out through international smuggling or undervalued sales. By linking resource management directly to macroeconomic stability, Ghana is showing how natural wealth can be harnessed to achieve broader national objectives. From a continental perspective, Ghana's success adds momentum to a growing trend across Africa, where countries are rethinking the role of gold in their reserve management strategies. In an era of shifting trade patterns, global currency realignments, and growing uncertainty in financial markets, gold is emerging as a more secure anchor for reserves. By joining the ranks of African nations with significant official gold holdings, Ghana enhances not only its own economic resilience, but also its influence in regional and global negotiations. This proved critical as Africa seeks to assert itself more strongly in global commodity and trade discussions. Looking ahead, analysts expect Ghana to maintain its current pace of accumulation, particularly if global economic uncertainties persist. The challenge for the Bank of Ghana will be to balance the benefits of higher gold reserves with the need for liquidity in other assets that are necessary for immediate trade and debt servicing. Gold provides security, but it must be complemented by adequate holdings of foreign exchange and other liquid assets to ensure short-term obligations can be met. This balancing act will require careful management, but the track record of the past 2 years suggests that Ghana is more than capable of navigating it successfully. The prospect of using part of the reserves to support infrastructure projects, social initiatives, and even a sovereign wealth fund has also been raised, pointing to the long-term vision embedded in the country's gold strategy. A sovereign wealth fund backed by gold reserves could ensure that the benefits of Ghana's current accumulation are passed on to future generations, creating a lasting legacy of financial stability and national development. This idea has captured the attention of many observers who see it as a potential game changer in how resource countries manage their wealth for the benefit of their people. The story of Ghana's gold reserves is, at its heart, a story of resilience, foresight, and strategic policymaking. From just 8.78 tons in 2023 to 34.40 tons in July 2025, the Bank of Ghana has overseen one of the most dramatic transformations in the country's reserve profile. This transformation is not simply about numbers on a balance sheet, but about the confidence, stability, and opportunities those numbers represent. It reflects a deliberate choice to reduce dependence on volatile debt markets, to empower local industries and to build a foundation for long term growth that is less vulnerable to the shocks of the global economy. Ghana's gold strategy is a reminder that sometimes the most effective solutions are found not in borrowing more from abroad, but in leveraging what a nation already has at home. With gold as both shield and spear, Ghana is navigating a challenging global environment with a renewed sense of strength and purpose. And with reserves at 34.40 tons and rising, it is clear that this strategy is not just paying off today, but it is firmly on track to deliver both immediate stability and long term resilience for the years ahead.
If today is your first time watching this channel or you are returning to this channel for the exciting content, please subscribe to the channel for more educative and developmental projects across Ghana and Africa as a whole. Do you want to know about the state of a project in Africa? Then make sure to like and comment the name of the project you would like us to talk about and its current state.